Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Friday, the 19th of July. Starting off with the FTSE 100, where the rising trend channel there from back in October still in place. The nominal floor of that channel around 81.40, and while we're above that, looking for the market to try and break that resistance line there from the end of May at 82.80. We've obviously had three failures at the 50-day line so far this month, which is not a great look, but still in that range, 81 to 8300. Therefore, assuming that we could still have a consolidation, which is taking us higher. The missing ingredient in terms of the RSI window is that we've managed to fail at RSI 55 on several occasions since the end of May, and that is a block and could be a sign that we have to head lower. If we do head lower, then that May support line projection at 80.60 is the potential destination, but obviously we are stuck in a range. Moving along to the DAX, and here trying to break out of that rising trend channel from September. If we remain below the floor of the channel there, 18,300, we've got a test of 18,000 to look forward to. We've got the 50-day line now falling. We failed above that on two occasions this week, so it does look a little bit negative, but as I would suggest, 18,000 looks as though that would be the floor for this market. Need to get an end-of-day close back above that 50-day line. We obviously had that bull trap earlier in the month as well, so a bit of a messy picture at the moment. The Dow is next, and after a week of stellar gains, not surprising that the market's backed off the record high levels. Key reversal down yesterday, which is not a great look, but hoping that we'll find support around the 40,100 level, and that will then allow us to then push higher towards the top of that rising trend channel from July last year, as high as 42,000. We were looking for that by the end of next month, which is probably the conservative way of looking at it, but still a chance, I suppose, that we might get up to there by the end of this month. Worst case scenario here is a move back to 39,000 on the floor of that channel. Moving on to Bitcoin, which has recovered well from recent probes below 55,000. What we'd like to see now is that there's a consolidation either side of the 50-day line there around 63,400. That would suggest we've got a mid-move bull flag on our hands, and the next level up would be up to the 71,000 area and that March resistance line. On the downside now, not expecting anything worse than the 200-day line just below the 60,000 level. Moving on to gold, which has also backed off of its best levels, but the ideal scenario now is that we find support 2440, 2450, and then head to the top of that rising trend channel from December at 2600 by the end of next month. Not expecting anything lower now than the 2360, 2370 area, which is the floor of that rising trend channel. Moving on to the stocks, and the cupboard relatively bare given the IT outage that we had today. Got RNS withdrawal symptoms, but starting off with Cambridge Nutritional, and here bounced off the floor of that rising trend channel from August last year quite sharply, and looking for a minimum here around 5.25 pence by the end of next month, hopefully much sooner than that, should really be by the end of this month. But the key here, obviously holding that 3.5 pence support area, which has been in place since June. Relatively obscure stock next, Dianomi, but here, interesting that we've hit the top of that rising trend channel at 59 pence, above that on an end-of-day close basis. Looking for a fresh leg to the upside, the top of the one-year rising trend channel there, which is at 82 pence, and looking for that by the end of next month. We've got a mini island, bear trap island reversal, so gapping down, then gapping up this week. And we've also had Golden Cross earlier this month, last week, which is also helping the course. So it looks as though something quite strong is shaping up there, and obviously there's a lot of ground to make up from where the shares were at their £2 higher plus levels that they had last year. On to first class metals, and here very pleased to see this finally rise. Obviously the management keep putting money into this situation and hoping to get this company over the line. Ideally they would sell one of their assets, but what we've seen here is that we had a suspicion that shares would get up to the top of that little channel from April, just shy of 3 pence, but above 3 pence now, looking for a January resistance line projection as high as 4.9 pence by the end of next month. Ideally now we stay above the old resistance there from April, around 3.3 pence, but we've got to allow down to 3 pence, which was the breakout level out of that channel. Time for a decent update on Genedrive, and here you can see that the aftermath of that bear trap island reversal has been positive. We had the gap down back in May and the gap up just during the week. It looks as though support's coming in just above or just below 4 pence, and while we're at 4 pence or more, looking for up to 8 pence in the top of that falling trend channel from back in October, and looking for that by the end of next month. Moving along to Kropz, and here situation is that we've gapped up after a golden cross at the beginning of the month, looking for the shares to hit the top of that triangle and obviously retest June resistance at 3.8 pence by the end of next month, and hoping that the shares will remain above that 50-day line at 1.7 pence in the interim. I haven't looked at Mindflair for a long time, but it looks as though the change of name from Perez has done the trick. Here we've got a V-shaped bull flag, as I call it. We have the sharp pullback from the initial spike, but shares remain above the now rising 200-day moving average there at 0.8 pence. And the longer they stay above the resistance on the way down at 1.3 pence, the greater the chance of a move up to the resistance line projection there from August last year, the top of a one-year broadening triangle base. And hopefully that'll be seen over the next couple of weeks. Pennpetro is next, and here the interest is that we've held on to most of the gains from the stellar RNS the company had earlier in the week. In fact, we've managed to bounce on old November resistance, 2.3 pence, and today actually the low a bit higher than that. The levels here now, 3.4 pence, one of the initial target, let's say, and then after that, if all things go well, up to 4.5 pence by the end of next month, but we need to stay ideally above 2.3 pence. But with the 50 and 200-day lines both rising, we are in the run-up to a potential golden cross, and that tends to be, by definition, a very strong part of the cycle. I interviewed Roadside Retail last week, and the shares now pushing up to new higher levels. The old resistance there, 13 pence in June, and the current target here, the near-term target, up to 19 pence at the top of that rising trend channel from back in January. It could be a bit more actually than that, but let's go for 19 pence first while we're above 13 pence. Next up is Tertiary Minerals, where there's been a nice little bounce above the 200-day moving average, and looking for the shares still to head to the top of that broadening triangle, which has been in place on the daily chart since this time last year. Top of the triangle there, heading for the 0.18 level, and we're looking for that by the end of next month or sooner than that. Verici has been a requested stock here, and seems to be taking off. We had the bullish divergence and also the breakout of that falling wedge from back in February. You could argue it was around the 6.5 pence level, and above that, looking for 9 pence by the end of next month. Hopefully shares can deliver a bit more than that, given that this is a bear trap recovery, and we found support above the old October-November lows. Yellow Cake is a requested stock as well, and here you can see that just the first signs that we're going to bounce off the floor of that falling trend channel from December. The nominal lows there, obviously, or the floor there, £5.22, so above that on an end-of-day close basis. Looking for the shares to head back towards the £6 area, even if they don't quite make it up to the 50 and 200-day lines near £6.17. If you're cautious, I suppose you wait for the shares to get back above the old June low at 560, but obviously that would be giving away quite a lot of the potential upside here. RSI 28, so we are oversold, and basically looking for the shares to have bear trapped from below the £5.26 November low, and the more that they can stay above that, the better. Finishing off with Zephyr, which has rehabilitated itself in the recent past, rising trend channel there from December, just breaking out through a rising 50-day line, which tends to be a leading indicator on the upside, and looking for the shares to hit up to 8 pence by the end of next month, while we're above 5 pence and the price channel floor. That's it from me today. More updates over the weekend.